So thank you for joining us today for the NS Group Fiscal Year 2025 full year for consolidated financial result. I am Taka Otsuka, Representative Director and the CEO of the NS Group. So we have presentation for the business and the strengths of our company and the fiscal year 2025 financial result and fiscal year 2026 guidance and growth strategy and cash allocation. So let's start with our company's business activities and strengths. So through our operating company, Nihon Safety, we have been providing rent guarantee services. In the Japanese property rental market, tenants have strong legal protections, which increases the risk of opportunity loss for property owners. Property management company may miss out a contract because tenants struggle to pass the screening process without a joint guarantor. For certain tenants, such as elderly people or foreigners, renting a property is challenging for these reasons. In this market, which faces these structural issues, rent guarantee services are crucial for resolving each stakeholder's issues and easing smooth rental contracts. The total revenue of the rent guarantee business consists of new guarantee fees, which are one-time revenues, and renewal fees, which are recurring revenues. We also earn recurring revenue from collection services and other related fees. Operating expenses consist of variable expenses such as sales commission paid to agencies, credit loss expenses, and litigation expenses related to uncollectible receivable, and fixed costs such as personnel costs. We hold a high market share in both the residential rent guarantee market and the commercial rent guarantee market. And we hold the top market share in the combined overall rent guarantee market. Each market includes both new guarantee fees and renewal guarantee fees. I'd like to introduce our 4 key strengths. Number 1, we have 66,000 agencies, which are the largest number of agencies in this industry, covering a wide range nationwide. Number 2, we keep high collection rates by our organized and experienced collection team. Despite that, we have accepted high-risk tenants. Number 3, we have high screening approval rates, which are excellent value propositions for especially small to mid-sized property management companies. AI screening using extensive data and experiences differentiate us from peers. Number 4, leveraging these strengths, we successfully expanded our market share within small and medium-sized property management company. These 4 strengths primarily contribute to our high profitabilities. So now, let's explain the full year consolidated result for the fiscal year ending December 2025. Our adjusted EBITDA margin, a key management indicator we prioritize, exceeded 40%. In commercial rent guarantee business, our growth engine, our revenue increased by 20.7% year-over-year, achieving significant growth exceeding 20% for 2 years in a row. ROE reached 22%, which is the same level as the previous year, keeping a high return on equity above 20%. As a result of these strong financial results, we give you the dividend payout ratio of 50% or higher at the end of December 2025 and the 2026 dividend forecast. I will now explain the details of our consolidated financial result. Operating revenue increased by 13.2% year-over-year to approximately 29.8 billion yen. New guarantee fee revenue increased by 10.3% year-over-year to approximately 15 billion yen. Net income increased by 11.3% year-over-year to approximately 6.3 billion yen. And adjusted EBITDA increased by 18.2% year-over-year to 13.1 billion yen. About the net income margin, while it fell slightly below the previous year due to the occurrence of temporary expenses, such as listing-related expenses, the adjusted EBITDA margin, excluding listing-related expenses, reached 44.1%, exceeding both the previous year and the forecast. Please note that while new guarantee fees are allocated based on the contract period, the figures on this slide are on a cash basis before the period allocated. So next, I will explain the details of operating revenue. Total operating revenue increased by 13.2% year-over-year. Flow revenue consisting of new guarantee fees rose by 12.2% year-over-year, while recurring revenue forming renewal guarantee fee and other revenue increased by 14.1% year-over-year. Breaking down recurring revenue further, the monthly renewal guarantee fees, which we are promoting, saw significant growth, increased 15.6% year-over-year. Other revenue, consisting of collection service fees for rent payments and equivalent items, also rose 32.7% year-over-year. Annual renewal guarantee fees also increased by 4.2% year-over-year. Through the steady accumulation of new contracts, the recurring ratio has been rising year-over-year, leading to our stable earnings. So next, I will touch on the breakdown of the new guarantee fee. We achieved double-digit growth with a 10.3% year-over-year increase in total new guarantee fees, surpassing the previous year's figures across all categories: residential rent guarantee, commercial rent guarantee, and others. Looking at the breakdown, commercial rent guarantee business, our growth engine, increased by 20.7% year-over-year. And the residential rent guarantee business also rose by 6.8% year-over-year. Breaking down the growth in the new guarantee fees, the volume increased by 6.0%, and the unit price growth rate was 4.3%. While we get benefit from the nationwide rise in rental rates driven by rent inflation, we believe the double-digit growth resulted from expanding transaction volume through strategic sales activities. Next, I will explain the breakdown of the new year-over-year changes in adjusted EBITDA. For the fiscal year ending December 2024, adjusted EBITDA was 11.1 billion yen. For the fiscal year ending December 2025, adjusted EBITDA increased by approximately 2 billion yen to 13.1 billion yen. 2 billion yen incremental came from revenue growth by 3.6 billion yen, offset by the 0.5 billion yen in increased variable cost and 1 billion yen in increased fixed cost. The increase in fixed cost came from personal expenses driven by strengthening sales and the collection teams for growth. So I will touch on the financial indicator. Left side, we keep an equity ratio in the late 30%. Based on strong financial soundness tailored to our business characteristic, we provide stable management and services. Please look at the right-hand side. As explained earlier, we have high profitability and strong capability of cash generation. And we believe we'll be able to allocate abundant free cash flow in the future to shareholder returns and growth investments. ROE exceeded 20% for 2 years in a row. Our cost of equity is 9.3%. Therefore, our equity ratio, equity spread is 12.7%. We'll continue to operate with a keen awareness of capital cost, mitigating business risk, and advancing the various initiatives such as strengthening business and investor relations effort aimed at enhancing industry and corporate recognition while maintaining and improving capital efficiency. Both the subrogation rate and the correction rate remain at favorable levels. The correction rate reached 96.5%, the highest level in the past 3 years. This strong correction rate contributed to reduced credit loss expenses and litigation expenses, leading to high profitability in this period. We will continue to advance the use of the AI and introduce new services, striving to further improve our subrogation rate and the correction rate. So next, I will explain the consolidated earnings guidance for the fiscal year ending December 2026. For the fiscal year ending December 2026, we will forecast consolidated operating revenue to reach approximately 33 billion yen, surpassing 30 billion yen for the first time, standing for a 10.9% increase year-over-year. We plan to achieve double-digit growth in new guarantee fees by expanding our market share throughout enhanced sales efforts, improved screening systems, and a diverse product design, alongside continued market growth driven by rising household numbers, persistent rent increases due to inflation, and further expansion of the commercial rent guarantee market. Furthermore, in addition to improving profitability through enhanced operational efficiency and cost reduction using AI, as well as keeping high and stable collection rate, we expect an increase in the profit to 7.9 billion yen, a 24.9% year-over-year increase. Adjusted EBITDA will be 13.7 billion yen, a 4.8% year-over-year increase. This is due to the absence this year of approximately 1.4 billion yen in listing-related expenses and other temporary costs recorded in the fiscal year ended December 2025. So next, I'll explain the forecast for new guarantee fees by breakdown. As mentioned earlier, we expect a 10.8% year-over-year increase in total new guarantee fees, driven by the market growth and strategic sales activities. Residential rent guarantee will increase by 6.7% year-over-year, while commercial rent guarantee grows by 18.7% year-over-year, reflecting growth levels comparable to the fiscal year ending December 2025. We expect commercial rent guarantee will continue to drive our growth. Next, I will explain our midterm management plan and its progress, as well as our growth strategy and shareholder returns. We have set up our midterm management plan for the period ending in December 2027. In this plan, we are targeting a total operating revenue of around 36.5 billion yen and an EBIT margin of around 43% in the final year of the plan period. In addition to the steady growth in the residential rent guarantee market, we aim for a double-digit growth rate of total operating revenue. Through accelerated growth of commercial rent guarantee, which exceeds the current market growth rate. The midterm management strategy incorporates stable revenue from renewals and ancillary income tied to existing contracts, alongside growth in new guarantee fees from residential and the commercial segment. Upside from potential acquisition of independent guarantors, alliance with the guarantors under consumer finance groups, and AI-driven efficiencies are not considered in this plan. We are allocating sales resources to prioritized areas, including urban regions with high rental demand and higher rent levels, where we have room for our market share improvement, as well as untapped areas. Additionally, we are promoting a shift to monthly renewal contract to increase revenue frequency, which we believe will enhance customer LTV and enhance top-line revenue. Next, we'll move on to our growth strategy in the commercial rent guarantee business. Even in the commercial rent guarantee market, agency we work with for residential rent guarantee also manage properties for commercial rent guarantees. We aim to get contract efficiently and steadily by using our business base accumulated through the residential rent guarantee business and setting up a dedicated sales with strong capabilities in the commercial domain. As for inorganic growth measures, there are potential benefits to acquire independent guarantors as well as guarantors under consumer finance groups. We'll actively explore the potential opportunities. So next, I'll touch on our IT and digital strategy. We recognize that IT adoption is slow in our company and the industry we belong to compared to other industries. We see this both a challenge and opportunity. Through initiative taking investment and initiatives, we'll strengthen our internal systems and pursue further operational efficiency improvement, including expanded AI use. Furthermore, we'll promote digitization in customer service and implement various measures to enhance convenience, aiming to contribute to the digital transformation of the entire industry. We have developed new screening criteria using AI technology, which has defined our tenant scoring. This new model prevents the rejection of suitable tenants and cuts unnecessary risks. Through our long years of business experience, we have accumulated abundant customer data, including delinquency information and collaboration data with agencies that our competitors do not have. Customers of agencies in the small and mid-sized property management company have a risk of delinquency, which makes it difficult for the competitors to manage these agencies. However, we have spent over 20 years providing services to customers in this segment, and we believe we have successfully built sufficient ability to keep default of customers at a low level through analyzing customer behavior patterns and accumulating information. This strength stems from our ability to have customers pass our screening in such segments as competitors typically reject, and our actual record of making subrogation payment and conducting collection activities. We believe that we surpass our competitors not only in terms of the quantity, but also in terms of the quality of data we have. By using AI models trained with this high quality and abundant data, we are achieving advanced operational capacities. We believe that the rent guarantee services we provide will become increasingly important to society in the future, driven by changing in the population structure and lifestyles. We have set up 5 material themes to contribute to society through our business activities. We believe that each employs awareness of their social responsibility, awareness of achievement of the goals in line with the materiality will lead to the realization of sustainability for both society and the company. We believe that recruiting and developing diverse human resources is essential to sustainably improving corporate value. We recognize that human capital is primarily the input supporting our value creation. We will strive to further strengthen our competitiveness by actively investing in human resources and continuously improving our PDCA cycle for development. Finally, I will explain the cash allocation and the shareholder returns. By using our strong cash generation, backed by high profitability, we will pursue further growth by allocating funds to growth investment such as IT and DX investment to enhance profitability, and M&A to expand market share, while maintaining and improving capital efficiency and shareholder returns. Supported by a sustained EPS growth, the year-end dividend for the fiscal year ending December 2025 is 35 yen, an increase of 2.32 yen from the earlier forecast. For the fiscal year ending December 2026, an annual dividend is 76 yen. Each figure exceeds the dividend payout ratio of 50%, which is our dividend policy. That concludes my presentation. Thank you for your attention.